Welcome aboard, everyone, to a new session of charting across the board. Apologies for the technical difficulties in the background. I'm checking if there is any frames that are being dropped. You guys let me know if the connection seems to be difficult to keep going. I will likely retry later. However, let's give this a try and see if we can present the technical arguments that we have in the chart for Bitcoin, the S&P 500, as we're approaching the FOMC meeting this upcoming Wednesday. There are some levels that I would like to present. If you guys can tag me or type in the chat, I would like to see if this is actually going to work or not. The connection seems to be a very poor connection. There is a 62% drop in the background, so I do not know if it's gonna work, my friends. However, there are levels that I would like to present in the chart to see if this can work or not. Once again, apologies. Technical difficulties sucks, but here we are. All right, let's give it a try. As we often mention, in order to understand the future, it's important to understand the past. I would like to make 2 points or 2 comments into what's coming next for the FOMC meeting this upcoming Wednesday. As you guys know, we have been tracking a very long sine wave for the cycles that dates from July of 2023. Okay, that chart is an old one where I was trying to make my projection for when the next recession may occur. You guys recall, I made my projections back in July 2023, suggesting or portraying that the Fed will stop hiking rate if we were going to repeat that period of flatness, the pause period, similar to what we observed in 2008. Okay, that indeed occurred. We have the pause and the cut also. Previously, before the cut, we have a very long range for a pause period, the periods of flatness that manifested until last year in August or the end of August for September, where they started cutting rate from the 5.50% range to current levels. Okay, so that was then, and this is where we are now. Our projection was that the next recession was going to occur sometime at the end of 2024 to mid-July or mid-year of this year, 2025 to 2026, the periods of risk. What occurred since then? The Fed indeed paused, right? The projection was manifested July 16, 2023. We're heading into that same month in the next month. Okay, basically in a month from now. So therefore, since they stopped hiking rate, we have the pause indeed manifested. Okay, some decline in the market, nearly 24% across the board. Significant declines. However, another important data set that occurs is also, we do know that for a technical recession, we need to have 2 consecutive negative GDPs. What occurred also in the previous report on the GDP for the US, we have a negative report with a number of negative 0.2%. Also, the previous one coming from a growth, 2.4%. We printed the first negative. The next one is coming this June the 26th. Will we get the second negative GDP, which define a technical recession? I do not know. What we presented then was this idea, okay? The pause in between before the cut. And of course, we did our research where the periods of risk also come that after the Fed stopped hiking, we have significant turbulences across the board if we base this argument based on the same sun waves from 1950s. Okay, a projection then also back in 2022. No, this may be sound, or this may sound as a broken clock, but our arguments back then for the S&P, a projection 2022 to current level 61, 62, overspill of the major ABCD at 63.55. Can we go there, my friends? I do not know. We tested the first PRC before the correction to 22% decline on the S&P. I believe nearly 30% on the Nasdaq, among other trading instruments or trading vehicles. Now, that was for the S&P 500. For Bitcoin, this is important. These are key data points on the macro. Okay, the macro, I mentioned before, nothing changed so far. On the macro, that projection remained. Okay, it was achieved already last year, in December of last year, prior to the decline. Then we have Bitcoin from the lows also, the major ABCD, to the 80 to 90,000 region from the lows. Okay, we over exceeded our projection. Now we're trading at 107, right? However, the reason why I'm bringing this chart once again is giving the current data sets on the macro once again, giving the conditions once again on the interest rate fund or the interest rate chart. Okay, projection, a decline. This is the next decline that manifested indeed since that time. To bring our approach, or my approach that I presented previously, what I mentioned before is this also back in September of last year. Very important to have context. This one was the projection back then. Let's revisit what we mentioned before, and we can compare to other gurus in the space if the same argument was presented back then. Okay, and once again, this is not to say we were right or wrong, only reading key variables in the chart that has been presented over and over and respected so far, at least as of now, so far, right? Okay, so this is what I said back in September of 2023 for the interest rate chart. Once again, keep these data points in mind as they are very important for the next turning point. That was a projection back then, September the 7th of 2023, nearly 2 years ago. we were projecting, or the projection was that if we were going to experience a period of flatness, then the periods of risk for the next recession was going to occur sometime late 2024 to early and mid 2025, which, as of now, the data points that we observe in the GDP growth in the US, we indeed have the first negative report that was early 2025, indeed, March, correct? So now the next one, it is expected for June the 26th. Are we going to have 2 consecutive negative GDPs this upcoming June the 26th? I never know, my friends, but if the data is respected, we know what can occur next, okay? And why this is important. Moving into S&P 500, this is a very important level. By the way, today we're also having the contract switch from the June contract. We're now moving into the September contract, meaning that the levels on the September contract are higher in price than the current levels on the underlying asset, the SPX, as well as the previous contract also from June. I believe the ticker here on the ES was changed earlier on. When I was checking earlier, also in a stream on the Discord earlier. This one was the previous contract. The June contract expires. Yeah, we're having the contract switch. You just can observe here, moving from the ESM, which is the June contract, to the next one, the SUE, or the ESU for September. So this is the current contract that we will be trading next, okay? This one expires on Friday, I believe. The June contract expires on Friday. Therefore, we're moving into the September, which is currently trading at 6,086, okay? And our levels for the S&P 500 remains at the 0.886. Because remember, we still have the W formation. No major turning points as of now, rather than turbulences at the 0.886. Previously, the 0.87 or so was tested, correct? The decline at the deepest levels of retracement for the 0.786. Now we're fully testing the 0.886, where, for context, the previous all-time high on this current contract for September was at 62.85, okay? That was the previous all-time high on this particular contract for September. Therefore, we do know that we are at the conjecture of a turning point, a PRC, potential reversal zone for a W formation. The overspill level on this particular pattern, a bearish bad pattern, can go all the way to this high level, a 61.96, 61.98.75. That will be the overspill if we manage to go to those highs, which in theory will be a new all-time high from the previous contract in March. However, in the futures market, that contract now is irrelevant. Therefore, we're using the new one for September. These are still the levels I am tracking. Currently also monitoring the hourly time frame, as there are a pending W formation for a bearish bad pattern. A bearish butterfly. If we manage to go slightly higher to where? To the 172 at 61.39, 61.57, and also the 1.618 for the golden ratio in confluence with the major overspill of the daily time frame. Understand the levels. These remain key levels for potential turning points on the hourly time frame. Moving into BTC, no major change on this particular instrument. We have the very sharp pattern where we previously were looking at June the 8th. If you guys remember, that was a turning point. However, considering that we're still within the sharp pattern, this W formation that you guys can observe in the chart, a correction towards the 50% at 93,000 or the 0.618 makes this pattern a bullish 5-0, meaning a precursor is this bearish shark that in theory, if prices go back to the 50% or the 0.618, we then have an argument for a bullish 5-0, which is a continuation structure. Okay. Now, if we zoom into the 4-hour time frame, you guys can observe that these prices are converging, okay, with a symmetrical pattern, connecting the upper trend line on these highs and the lower trend line for the lower levels. Only if prices manage to break higher than the previous B point at 110, we can then have an argument for a deep crab pattern at the 1.618, 118, 118. Will that be the case? We first need to break or bridge above the V point of the structure. Okay? If I repeat myself in the background, it's because I do have my monitor, therefore I can hear myself and I can get distracted with my voice in the background. All right, so that is the argument on the 4-hour. We move now into the hourly time frame. We then have another argument. On the hourly time frame, in this case, for Bitcoin, we currently have an overspill level of a deep Garley, a bearish deep Garley, if we compute this segment of the move, the previous lower high at 108 to the lows, and the PRC at the 0.886 for a bearish deep Garley. If no major turning point occur at these levels, we then know that something larger of a bigger magnitude is developing or unfolding on the 4-hour. Therefore, if we anchor the entire segment of the move from the previous high, once again in this range now, we then have the argument for the 0.886 and the 0.786, 108 overspill to 109. That was the same levels we mentioned. Nothing changed so far other than this previous decline at 100,000. I believe it was this one prior, this one right here, 1,000. Instead of a bad pattern, we printed another shark here on the 4-hour. I believe the previous argument was if we were printing a bad, the same target was the same, 109, 110. We mentioned that previously on the prior stream, okay? However, we printed a lower low and this now switched to a shark pattern. You guys can observe that there are many Ws, M&Ws on the chart occurring in this converging trend line or a symmetrical structure that they can break on either direction. We have the measured move of the structure. If we compute the height of this wedge, you guys can know or already know that that can be the measured move on either direction, okay? Instead of speculating higher, I would like to break levels by levels first, mainly 110, okay? And also the next intersection between price and time is coming this on the daily is Thursday 19th, okay? But considering that we have the FOMC meeting this Wednesday, that is also part of the intersection between price and time on the 4-hour, okay? Already occurring on Wednesday 18th, okay? Very key turning point also in the market in confluence with the FOMC meeting. So therefore, there are some arguments I'm tracking on the DXY. There's a major pending bullish Garley. Therefore, are we going to see the inverse correlation between equities and the DXY? Traders moving into or pulling profits from the equities. Apologies. Will they be moving into the DXY? Apologies, my friend. I'm coughing in the background. Frames are being dropped. I believe I'm going to end the stream and try it again later. I'm not sure if this is working or not. If not, I will repeat that later. So therefore, to culminate the stream, the arguments I do see is a pending M formation and bullish structure on the DXY on the dollar. And if we have the turning point on equities, we will know if that will occur once again. And also, very important to monitor the GDP, my friends. My projection back then was a recession, at least a technical recession. Okay, I'm not calling here for the end of the world, but rather technical recession based on the data or the data. Okay, the US printed indeed a negative GDP projected since 2023. Can this be the argument occurring this upcoming June the 26th? We will see, my friends. All right, everyone. Thank you for joining. I'm going to try to do another stream later on if this one did not go properly. I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers.